Wealth creation is within reach. In today's video, I'm going to show you how you can use a whole life as a tool to create wealth for yourself, your business, or your family. So when I talk about whole life, I am actually talking about dividend-paying whole life. Dividend-paying whole life come from a mutually owned insurance company. So as a client who owns a product with an insurance company that is mutually owned, you get paid dividends every year. Dividends are not guarantees, but they are paid annually. The dividend scale is declared every year as well. So between March and September, different companies have schedules to release that. So make sure that you know the company you are getting the product from has a track record of paying dividends. And you need to understand whether it's mutually owned or stock owned. It doesn't really matter, but it's always good to know. Now, the reason why I'm talking about whole life specifically, if we go back to the history 200 years ago, the only product that survived every market movement, depression, it's a whole life insurance product. And I'm talking to someone who is more conservative, who is more of a guaranteed kind of plan, someone who is looking to leverage this tool to fund their lifestyle. Now, whole life can be used in different ways. You can use it as an estate plan, or you can use it to create wealth. In this particular video, I'm talking about how you can use it to create wealth, to increase capital, to fund your business, to fund your lifestyle. This product specifically requires someone who has an extra cash flow and someone who understands the leverage, someone who likes to use other people's money to create wealth, someone who understands using a debt to your own advantage, not consumer debt. You're using insurance companies' money to fund the lifestyle or the business or to increase the capital while you're creating wealth at the same time. So that means you're creating your own leverage system, banking system. How many cars will you ever own in North America? How many trips will you ever travel in North America? How much school fees will you ever pay for your children in North America? How much renovation will cost you in North America? The issue is finance. If you understand the refinance process, you understand what I'm talking about. This video is for you. What do I talk about refinance? I'm talking about we need to understand what opportunity cost is all about. When we go buy our car or we renovate our house, there's always two options. You can borrow money from Home Depot or Rona or any construction company or your line of credit and build that. That's good. But you have to pay back with interest. If you say, no, I have cash saved, so I'm going to do cash, that's great, you have no debt. But you lost your opportunity cost. Because when an opportunity comes, your bank account is empty. You just did a big renovation. You need to restock. So how do we deal with these continuous things that make us cut our apple trees every single time? When I talk about cutting an apple tree, I'm talking about cutting your cycle. Rule of 72 is not working for you. It's working against you. You're a good saver, but for you to jump to the next level, you have to cut your tree. You have to withdraw the money. Now think about it this way, Moses. Let's say you travel every year with your family, and your travel cost is around $9,600. So that means you're saving $800 a month for your trip that you don't want to use a credit card. You want to use cash. So you're a good steward of saver. Now you save $800 for 12 months is $9,200. In December, you take your family out because you saved money. Yes, you're going to use your credit card, but you have the money to pay off right away. You're excited. You don't have anybody's debt. But what did you do to yourself? You cut your saving process because next year you have to redo it again. If I give you a seed of apple tree and I tell you plant this, water this every single month and let it grow for 12 months. 12 months, the apples are now ripe. I tell you, Moses, your apples are ready. You have two options. Take a ladder, go up, get the apples, come down with apples in a basket. Option 2, here is a seesaw. Cut that apple tree. Let's have all the apples we want. Which option will you take and why? Majority people tells me I would rather go up with a basket and get the apples and come down. Why? Because the tree will be there next time I want. If you know the tree will be there next time you want apples, then why are you cutting your saving cycle every time by using cash? Is there any other way? That's why I'm here. That's why I want to help you understand that life insurance is a tool that can be used to fund your lifestyle if it's done properly. What are the benefits of using it? Safety, number one. When the market is crashing down and everybody is wondering what is happening with tariffs and all that stuff, you'll have a peace of mind. I have money saved to insurance company. Yes, it's not an external rate of return, but it's an internal rate of return. I can sleep knowing that tomorrow, if I find an opportunity of a real estate, I can easily leverage that money without worrying about what happened in the market. Safety, very important. Growth. Rule of 72 teaches us the compounding effect. When you're doing your savings in your whole life plan, your money is compounding every year. Now remember, you're not using your money. You're actually using the insurance company's money. So I want to teach you one thing. You need to be a good steward of your money. Understand the idea of leverage and study what the bank system does. They get deposits, so you're putting deposits in your plan. They lend out the money. You want to get money lent to you, right? They get interest paid back. You want to pay back because you're creating a system to fund your lifestyle. It's not a one go and you're done. It's something. Let's say today you renovate your house, you want 20,000. You can leverage that. After 10 years, maybe you have a big trip. You can leverage that because you put it back. Remember, you're using insurance company's money, so you have to pay back the loan. But your money is compounding, so growth is guaranteed. The other thing is tax. In my previous videos, I've given you 3 things that eat into wealth: taxes, fees, and inflation. When you talk about taxes, in terms of whole life, if it's designed properly, you can access money in a tax-efficient way. And that is a benefit of creating wealth through that. And then the last thing is to create protection, estate preservation, wealth creation. As you leverage, you're creating generational wealth. Where else will you get that? This is why we say we need to educate ourselves, because life insurance is not about death. Life insurance is a tool, my friends. And if you know how to use tools properly, you go to Home Depot or Reno, you get a gift of tools. If you have a toolbox and you don't know what to do with the tools in the box, it doesn't serve you any better, right? So that's why I'm giving you a tool to help you fund your lifestyle, to help you fund your business, to help you fund your family's lifestyle while creating generational wealth. If you like what you're listening to, like the video, share the video with friends and family. Get the contact details in the descriptions below. And always remember, wealth creation is within reach. Me and you together can make a blueprint, a proper financial blueprint to create generational wealth for you and your generation. See you in the next video as you plan to create wealth. Thank you.